Folks, just doing a sound check. Let me know you're hearing me all right. Awesome. We'll get started just in a few minutes. Let you folks watch the S&P futures trade here while I'm getting ready. Hey, folks, sorry about that. I hate when this camera has AI and it follows me around, so I didn't notice it followed me. So good afternoon, everyone. There's a fair amount going on in the last couple of days, right? We saw this massive sell-off yesterday, traded down below the STX numbers, rebounded. We basically have went nowhere, and the sideways pattern just kind of continues. And I know sometimes it feels somewhat catastrophic when we're in the middle of all this stuff, but it is just the market after all. And I guess maybe when you get as seasoned as I am, pun intended, then you start to realize that a lot of these movements don't really mean a lot that happen from day to day. So what I'm going to do today, since we're doing this just last hour, I'm going to run through some analysis very quick that I don't get to do on the daily videos. And I'm still working on a project, still trying to get my trading view chops underneath me. We're working on getting some indicators out there. So just so people understand, there's a couple indicators we're going to be putting out. Not sure exactly which ones. There may be some that are under a subscription, some that will be completely free. I'm working on a lot of stuff right now. But if you're using WaveTech, I'm not putting WaveTech out for free or anything like that. The models aren't going into, at least at the moment, the models aren't going into TradingView at the moment. So I should be able to start posting some things up here. I thought I was going to be ready by the weekend. I did do a post, and we're going to talk about that post, and I'm going to go through some detail. I'm also been approved for streaming on TradingView. I have to do a couple more things before I will simultask in the future doing this stream and on TradingView and on YouTube at the same time. So let's go ahead, and what I want to start with, speaking of TradingView, and I'm just trying to get to the right page here, and thought I had this all set up, wrong page, there we go. Let's go over and take a look at the screens and see exactly what's going on. There's a couple things I'm just going to integrate in that we need to be talking about as we go forward. And there was a report that I saw, and I'm going to come back on camera for a minute here. There was a report that I saw this morning that they're going to take off, I guess a judge has overruled the moratorium on rent. So this could get interesting if people have to, if they can start to evict people from rent, not paying rent, that's going to really press the hand. And I think, while that sounds somewhat negative, what I think it's going to do is press the opening of the economy even faster. I don't see it as a ultimate negative, because the way that, I guess, avert any pain is get people back to work so they can pay their rent and work on some kind of buyout situation. Who knows what happens ultimately through this craziness. I actually think if they had maybe done this sooner, it would have forced the hand to get the economy opening a lot sooner. So anyway, that's for other people to decide. So the other thing that I just want to touch on real quick and just talk about all these earnings reports. Earnings are coming in like 22% better on balance of everything that is expected. So we're going to continue we've got a lot of earnings ahead of us this week and going in through next week, and I think the following week after that. So we have a lot to digest here, and this is the big week with employment numbers coming out. I'm sorry, but this is going to be a big week with employment coming out. We saw ADP come in a little soft at 740. I'll go through that in the nightly video tonight. But it's interesting because, April was a huge month. We were up 5.2% on the S&P. So I'm going to put up a long-term chart here that I want to talk about here just for a few minutes. And this is on TradingView, this particular analysis. And this goes back to the 1929 lows. and counting the wave count from there. And what it appears that we're in the final leg. I have been actually could be called responsible for maybe yelling wolf several times. I did an annual report on the markets a couple years ago, and I thought as we were coming into this high back in 2018 that we were very close to what I call the generational high. And as you folks know, I've been talking about the being in Japan, around 1984 Japan, where we saw a massive expansion of money supply there, and the yen actually appreciated and stayed stable, and it created a lot of buying power. So this is a quarterly chart that you're looking at here. So every bar is 3 months, and this gives us the ability to do a very long-term outlook on the markets. But if you look down below here and look at the PPMs here, they're absolutely screaming right now, where we're looking at on a quarterly basis the 10 quarter moving average is moving at 5.3, 3.6, and 3.2. These are massive numbers. So there's no chance, as far as I can say right now. That doesn't mean we couldn't have a correction at some phase in the next couple of months that would be a 5, maybe 7, even 10%. What I'm saying here is this, on a long-term basis, this thing has got a ways to go. And I'm going to show you a couple of the Fibonacci projections out there that suggest that we're probably going at least to maybe the minimum will be to the 4,400 level, but most likely the 46. And I'll show that. I'll bring up TradeStation here in a minute just to show you some of those, because I have all my tools built in there. And that's what we're doing right now, is we're trying to build in all my proprietary indicators in on TradingView so I can start to use that. And there's a bit of a learning curve for me, at least. Things aren't as intuitive as they feel. I guess because I've used TradeStation for 35 years and grown with it step by step, it feels more familiar. So I'm still getting familiar with this platform. But this wave count suggests that we're in the final wave of something very big, and maybe it has everything to do with the craziness that we're seeing in the creation of debt. Maybe Ray Dalio ends up to be right, but it's just a matter of where does this thing end. As I mentioned, Japan 1984, you saw about a 5-year expansion to points where people never thought of. And once I get my legs under me and we have more time on the live stream, this week is constrained to this hour, I'll go through some of the other markets, because there's some interesting things happening on the Japanese markets. My plan is to do a video talking about these individual international markets and how they're all set up, and what it kind of come up with a global world view, if you will. And that's going to be important, I think, as we come into maybe the end of 21, coming into 22. But these trends I'm talking about here aren't going away for a while. These trends typically last for about 15 years, 12 to 15 years. So, if we wanted to say the last cycle was maybe in 09, we're now we've got another 3, 4, 5 years to go to get to these cycles. So we'll just see how everything sets up. Obviously, I'm going to continue to cover this, but we are in what appears to be in the final leg, and and I'll go through more detail on a video, because it's important to understand that while this is the 5th wave, we're possibly in wave 3 of 5, not wave 5 of 5 of 5. And if you don't know Elliott, that means nothing to you. If you do know it, that means that you're at the end of a sequence. So I still think there's consolidation at some point in the next, whether it's 3 months, 6 months, at some point where we do a high level consolidation slash a 4th wave, and then a final 5th wave. We'll see how it all sets up. And when we're looking at quarterlies, now this is super slow motion, right? This is, 600 frames per second. So it's moving very, very slow because every bar is 3 months. So it's going to take multiple years for this thing to actually start to show what I'm talking about. So let's go ahead and let me just look at a couple things you folks are talking about. Let me go ahead. Let's go over to TradeStation now, and let's take a look at I put up some of the expectations for what is likely in this pattern. Now this is the weekly. These dots above here actually are suggesting that we will move toward these levels. This is the levels I was just mentioning: 4605, 5139, 5468. Typically we'll go in between the cyan and the orange line, which would be between 4605 and 5100. We'll just round it off. And really what we're talking about here is something that is going to take a while to unfold. We're looking at, not maybe 24 plus weeks. So that would be the better part of 6 months, maybe as much as 9 months to get to this level. But things happen very quickly. It's really not that big of a percentage move to 4,600, but this will take a number of months to unfold. So 4 to 6 months would be a minimum for this to be hit. And I've talked about this before. I don't think we're going to have the summertime blues. Folks are asking about sell in May and go away. That would just be too easy. I actually have only seen that work a handful of times over the years, and somebody will maybe call me out on that. But my recollection is I've never paid attention to that. And there are times you pay attention to it because everybody talks about it, but it's not a lot of relevance from that standpoint. So let's go ahead and see if we can break this down a little further. Let's go over to a monthly graph real quick, and then I'm going to move on. So the monthly graph is, well, what's been happening in the last 2 months is we've been trading up to the RXT number on here, and I'll show you where that is. That number is last month was at 4207. We printed 4218. This month, which obviously we're in the first week of the month, R1 is 4237, R2 is 4301, and R3 is 4365. And you see the RXT for the month is actually at 4421. And I'll show you one other projection that's out there right now, and this will actually tie this together. So as I look at the daily chart, let me go full screen so you make sure you see this well. As I go through the daily charts here, you'll see that there's current projections there of 44.56, that's the minimum, 45.85, and 46.64. Now what we're seeing here is not a lot of momentum. As you look at the PPMs on the screen, the momentum has dissipated and we're very flat. And I've talked about this. The 21-day moving average is the current demand line, and we're just seeing it hover right along that line. This also gives us a fairly close hair trigger on a trade that's on right now. And I mentioned in last night's video that today is a cycle event. So if we can close higher, if we were able to close above the 4179, this is SPX we're looking at, 4179 today, then that would confirm a move up. We should see the market grid turn up tomorrow, and then we would possibly be talking about 42 handle again in this market. But really, as you look at this, let me put a weekly chart up. I want to show you one thing real quick, is that if you look at the close 41.85 4 weeks ago was the close. 41.79 was the close 2 weeks ago. 41.74, I'm sorry, 41.81 was the close last week, and we're trading 41.71. So this is, you can see here on this chart, it is 100% flat. There is no trend. But what we're also starting to see is that PPM1 is starting to turn up on the weekly, which is very positive. It's at a plus 0.90, PPM2 0.62, and PPM3 is at a 0.61. So what that is really telling us here is that we're in a very robust trend. This market is going to continue to climb. I said, we're going to climb the wall of worry, and that's exactly what's going to happen. The tax proposals, the stimulus, the infrastructure bill, all this stuff is just proposals. There's nothing real. Who knows whether they even get anything close to the tax proposal that they're trying to get through right now. We'll have to see how this thing plays out. For right now, the only thing that's real is the stimulus bill that was done a couple months ago. That's it. And the Fed is continuing to buy assets and all of that stuff. And I think Janet Yellen, I kind of called her out on last night's video. Finally, I saw some comment that she's like, oops, I forgot I'm not Fed chair anymore. So anyway, what we're going to see going forward, we don't know yet. We don't know the impact, because most of this stuff that's being talked about has no relevance. It's just perceived to be important. In fact, we started looking at this infrastructure build out of a portfolio a number of weeks ago, and it was way premature because there is no infrastructure deal. All they're doing is talking about it. And the same thing with the clean energy and things of that sort. All of those markets have been kind of backfilling a little bit. Nothing drastic, but that's what's going on. So let's go ahead and rip through some more stuff here, because I only have the hour today. Let's go ahead and take a look real quick at the NASDAQ. And NASDAQ has, even though it's been flat, this is the weekly graph, it's traded down almost to its 21-week moving average. Let me move this around here. It's traded down almost to the 21-week moving average. So it is at 13,343, the low 13,380. So we basically came down to that yesterday. PPM1 is turning up. This thing still looks good. It's not rolling over at all. In fact, you see Apple's trying to rebound. Tesla is still under pressure a little bit, but for the most part, these large cap stocks are starting to come back in. Yeah, so we'll see how this thing plays out. I'm not sure there's like this big bounce. I think we're just locked in the sideways range. We're looking at S&P hanging right around that 4170, 4169.71. So we'll go over to the close here in about a half hour, and we'll start to focus in more on what the activity is. But the weekly NASDAQ still looks really, really positive to me, and that we're going to move up. These new objectives here are for a move toward I mentioned this, I think, in a couple of videos ago, 15,156 is the next number on the upside. So we're still looking at a lot of positivity in this market. It's not rolling over. It is really just that 21 is that demand line. And if you look back where my cursor is here, you'll see that the 21 has been the primary demand line. We get below it a little bit, but we've managed to close above it every week. And that number is at a 0.41, so there's actually only a 40% probability to close under that level for today. Let's move on to the Russell. Take a same look here. Russell doesn't really have anything, but it is forming a dragon head, which suggests it will resolve itself to the upside. The 21 period moving average is also the primary demand line here, 2189. 22.37 last trade, so we're above that line. The 10-week moving average 22.58, so I'm expecting to see this thing turn up. But we have the PPM2, which is still at a 0.71, and it's in that trend maintenance formation that I've talked to you a lot about on this channel. So let's go and look at the spread real quick, because I've been talking about that a fair amount, and I covered this last night. But this spread is likely to continue just a little bit higher. It's already starting to stall a little bit. I still believe that this spread will actually take, and let me just draw in what I think will happen here. I don't think we'll get much above this level right here. And if it does move up, I think ultimately we come down and we challenge these lows, and that it loses some of its leadership, and the NASDAQ will gain on these small cap stocks here as we go down the road. If you look at it from a trend standpoint, back in March, I remember telling you folks on there that these small caps and we're going to underperform going for the short term. And so there's some good support level on this chart here, but I actually don't think this really matters. I think you can go below that, and the NASDAQ actually comes in and leads the way again for a while. And this spread is likely to come maybe way back in this level. I could run some Fibonacci numbers on here, but these are the basic levels that we're looking at from that standpoint. Okay, so that's most of what I wanted to say. Okay, so I want to talk about the unemployment rate that's coming out on Friday. This is an interesting look. This is the unemployment numbers going all the way back to 1967, I think. Can I go back further? Yeah. Go all the way back into right at 1952, they were 3.63%. But what I'm thinking is going to happen here with this, we've got these big spike up here, is that we're going to come back into these moving averages and stabilize. I mentioned this a couple of nights ago. I think somewhere around 4.5 to 5.5 range is going to be where we start to stabilize from the standpoint of the unemployment level. We're not going to get back to pre-COVID levels and be printing down at the 359 level, which was pretty close to the 1950s. It was down to 2%. But what we should do is stabilize here around 4.5, 5%, and then I think it'll get interesting, because then the Fed's going to have their hands full of trying to get more traction, but I don't think they're going to be able to get it. And this is probably going to come into play in fourth quarter. Maybe this is when we start to finally maybe have some questions about the economy and what's going on, and inflation and all the things that are out there. So I'm looking like somewhat clear sailing skies until we get to that September, October, and beyond. And then these numbers should start to stabilize. It'll be interesting to see where the numbers come in on Friday. If we do get the million more jobs, that's only going to move us to around 5 point. Let me see what the last report was, at 6%. So that's, I think the expectations for Friday is to move down to 5.8. So this is going to be the story probably that's going to drive at least what I'm going to be looking at very closely and what's going on here. So let's look at one more thing on this see if I can find what I was looking for here. And this is lumber. And this is lumber on a daily basis. And I want to show you something here. This is pretty insane, this trend. We're now at 16, let's see what the last is. We're now at 1639. We're up another 2% today. There not only is there high demand for lumber, but there is a shortage of lumber right now because everything is surged all at once. And so this is going to continue to keep the inflationary expectation, especially in housing. I saw that it's added about a 30% extra cost just for 2x4s. And I was talking to somebody the other day, and they were telling me they went to buy 2x4s, how expensive they were. They're absolutely insane how much this stuff is costing now. And there's other types of lumber, some of the plywoods and everything is really off, very expensive as well. And when it comes to housing, somebody mentioned last time I talked about this last week was, 3D printing of housing. That's fine. Still got to buy windows, still got to buy all the stuff that goes inside, and virtually all this stuff is skyrocketing in price. So what you might save on that, you'll probably end up paying up. I mentioned that window prices are up 350+%, even for the cheap windows, just windows in general. So anyway, this is really the expectations for the markets to continue. This makes it a little more dramatic here as I pull this over. This is the monthly graph. You can see it's just parabolic curve. So these things usually don't end well. Last time we had one, we backed up. So we should see some backing up. But as we look at the PPMs here on this monthly chart, they're just insane. We're going to hold probably the 10-month moving average when it gets up there. So this is going to remain very stable from that standpoint. Okay. Yeah, I really appreciate what Jay's saying, folks. I don't care what you guys talk about stocks and stuff. You need to hook up on the side. Let's otherwise I'm just wasting my time here if you guys are chatting about something else. So I know how it works. I know how the internet works, but I really would like to have some engagement here. And I look down at the line. I just want to see that stuff. So hang in there. It's all good. We work really hard trying to make this community profitable. So let's keep doing it. And yeah, so we'll do some. What I'm going to do is, what time is it? I'm going to go for another 15 minutes on some market stuff that I have some notes here, right here, that I want to get through. I'm through a little bit more than half of it. And then what we'll do is we'll look at a couple stocks. I'll hang out to about quarter after. When the markets close, I'll hang out for a few more minutes after that. So yeah, no, listen, you don't have to be sorry. Just let's just keep it going. I want to look down at the line and see what we're talking about. That's all good. Yeah, and we could start a divorce channel. You have no idea. So I saw that comment. So let's take a look at a couple other things here. Let's go. One of the things I want to go to here, and let me just see if I can bring it up. I'm going to go back to TradeStation, my old, and I want to look at. Let's go to the Dow real quick, and I want to talk about the Dow and the 10-year. That's going to be in focus as we go forward. I still believe here, looking at the Dow, that we're going to get this thing to bear with me one second. Yeah, I still believe we're going to get the dollar up to the 200-week moving average. That's at 94.92. I believe we will see some appreciation in the dollar. The PPMs are starting to bottom here. And in spite of that, I cover gold every night, so I'm not going to cover it in this hour. But in spite of that, I still think gold still looks very positive here from a standpoint of the bottom. They're both setting bottoms up at the same time, and there's nothing to say that it can't continue along those lines. So let's. So I just wanted to make that mention on the dollar, and let's go to the 10-year because this is probably even more significant. It's interesting. I thought that when Yellen made her comment yesterday, everybody's saying, well, it created some emotions in the equity markets, but the actual 10-year actually downticked about 5 or 6 basis points after her comments. So it's obvious that she doesn't have a lot of clout like she thought. I'm not sure what's going on. It's going to be interesting having the folks that are working at the Treasury and see if there's a conflict coming in. See if Yellen and Powell get into some kind of conflict. That could set up an interesting scenario. But as we look at the 10-year, I've talked about this a lot. I still think we're heading toward around the 2% level. The trends are still up, but we're starting to see some of the upward pressure or otherwise the upward trend on a short-term level start to dissipate, and the probabilities of coming down toward the possibly the 148, 145 level is possible in here. And I think if that happens, we're probably going to see markets continue to do well during that period of time. But PPM1 has still got a lot of upward pressure. PPM2 is telling us that if we did get down to the level I just mentioned, that we're going to hold there, and that will be enough probably to keep everything stable as far as we go forward. Let's take a look at the monthly just real quick. And the monthly, we have resistance at 185, 195 on the weekly. That's the 200 week. 185 is the 40-week moving average. The absolute, right now the PPM2 is at a plus 0.32. We're about to see the 10 and 21 week moving averages cross, and when that happens, that usually sets up the first 2 bars or so will set up for rates to come in and probably come into the level I just mentioned, 148, 145, something like that. Yeah, I think that the bond market's a little more complex than people trading equities. The bond market is so much larger than the equity markets that equity players, they can have some effect, but there's much bigger games going on in the equities than there is in the bonds rather than the equities. Being an ex-bond guy, we always had all the power because the bond market's multiple times bigger in capitalization. And now that with all the sovereign debt in the world, debt markets are king. So the flows that come in there's a lot of different influencers, and I'm not sure, that I guess what I'm saying is I'm not sure that there's going to be any major effects by shifts in money, equities versus bonds at the moment. I don't see that as being a big place. I see somebody. Yeah, Yellen. So is Yellen talking again? I see that. Okay. So a cycle event is these dots. What happens is I built an indicator back in, it's hard to believe, back in the early 90s. It's called Cycle Finder, and you'll see some dots here. And what it does is it looks at Fibonacci time sequences. And in the indicator I built there, it's a cluster, and it has to be 3 or more cycles hitting on the same point. So it uses Fibonacci price sequence to determine what areas of the chart might see a turnaround. So it's, people have used moon cycles, these type of cycles, and lately I've been paying attention. We're starting to get some frequency of these cycles to come into play. So I've been keeping them on the screens, watching them here recently. There appears to be some decent timing points that are coming. So it's just really looking for a time in multiple sequences that are telling you that there might be an event there. So it doesn't mean something has to happen, but it does mean that we're likely to see there's potential for something. So you get a time cycle expectation, you watch and see if the markets confirm that it did a reversal or did some technical event that's going to help you understand the direction of the movement. All right, so what time we got here? 36. It looks like the composites come under some pressure. The Nasdaq's falling a little bit here. We're seeing the S&P really pretty stable. It's still trading 4169, almost right at that 4170. It really hasn't moved much. A little bit, but not a lot. A couple bucks. I think what I'll go through here real quick is let's go ahead and take a look at Bitcoin for a minute. Let's look at the cryptos just for a few minutes. And I think Ether's worth looking at. It's just going crazy. As we look at Bitcoin on just from a market grid viewpoint today, 58,118 is the here 57,336 is R3, the high 57,948. So we're trading between R3 and RXT. So we're definitely seeing PPM1 turn up. This thing is starting to bottom here, and looks like all 3 PPMs are turning up. This is a daily. The weekly chart looks like it still has this monster. I've been talking about this for weeks on end. This monster consolidation phase going on here. And there still looks like there's more time to go. PPMs are trying to turn up a little bit here and try to get some more momentum going. But we've been hanging just above that 10-week moving average. A simple 10-week 5648 is a magical number. We closed 1 week below it is all, and then right back above it, especially with the PPM is turning up. So we're going to continue to move along these lines and stay within the grid. As you look at the grid, probably R1, maybe an R2 on the upside, which would put us back at 60,164, 62. Let's go to Ether and take a look at this, because I think that's we're getting on a weekly basis with this thing blowing up here. We're getting a potential for an RXT sell. Now we got one of these on Bitcoin, and that's what set up the large consolidation phase. And I think that's what's about to happen here with Ether. If we continue and we close above this level, which is 2204. and we're at 3,400, so it looks like that's likely to happen. But this is, my expectation here would be that we would stay up at these levels and then go into a sideways range, and the grid will actually dominate. I'm going to go back to Bitcoin for a minute. This is what I would expect Ether to look like, is get one of these big, what I call dragon head setup, where this thing is just going to consolidate. It's going to consolidate for a number of weeks before it goes up. So let's go over. I think I have, over on the right-hand side of this screen is Dogecoin. We're looking at PPMs are actually softened up a lot. It did print almost 70 cents overnight, and then it dropped all the way to 53, and now it's back around 61. But this thing is losing a lot of its momentum, so I suspect this is going to consolidate. Maybe it's waiting for SNL and Elon Musk on there. So anyway, so that's pretty much the cryptos from that standpoint. So we covered all of that. So let's do, I think we got time. I pretty much covered everything on my sheet that I wanted to talk about here. There is one thing that I want to bring up, one thing, and then I want to bring up our database here, and I think we're at 57.10 long. I talk about this every night, but I do not expect to see this thing get any major liquidation. We're probably at the worst of it, and over the next couple of days, we should see this start to get some traction again and start to rotate back into market. So I still see a very positive situation as we come in here. You can see it in Portfolio Expert as well. You can see that the interesting thing with our product, you can use both products within the same one. There's things that WaveTech does that Portfolio Expert is kind of next level on things, so you can use it from that standpoint. Okay, so let's do a couple stocks here, and then we'll come into the close. Somebody's been mentioning GME. Let me bring it up on a daily chart here. Yeah, it's just kind of consolidating in this level. I've talked a lot about, GME. I have to say the roaring kitty was right in the analysis, because this company has now completely restructured itself. CFO, CEO, money-wise, they're 12 billion strong, and they're going to emerge out and have a new business. And then from there, you'll be able to figure out whether this is a failure or not. So, okay, so I guess we'll bring up uranium. And in fact, I may go over to There's not a lot of data on this, so let me go to daily. Yeah, this is probably just finished a fourth wave, complex fourth wave, and looking for this thing to go probably equal length of this wave one down here. So you got to, yeah, this is an interesting pattern that's unfolding here, but it does look like we should see. Let me bring it up in TradeStation and let's just, yeah. So there is some objectives up here for it to go to the 6320, 6697, 6930 on this stock on a daily. Let's see if there's anything on a weekly. Yeah, we're also about to get a weekly RTX sell, but there is also upward objectives. Minimum 62, we've exceeded that, and 71 to 76 would be the upward target on this. There's not a lot of data here, but I believe I can go back over here and get a little, yeah, I have much better data for the PPMs here, I think. Yeah. Well, I'm going to attempt to improve attempt to improve TradingView, because I'm going to give them a technique that will make their platform so much better. It's one that we figured out in 1998, and I've never seen a software company do it. And I didn't think I'd ever give the idea away, but it's not that big a deal. But if you notice here, when you look at a chart, you have to get enough information to calculate the indicators, and we figured out how to overcome that, and I'm going to share that. We'll see if I get to the right people, and I'm actually writing up an entire, basically a proposal on how they can fix their data and how they can calculate from the very first bar. We figured this out. It's pretty genius, actually. So, but let's move on. What time are we getting to be here now? We are at 47, so about 13 minutes to go. Let's flash over just for a second to see what's going on here. Yeah, so we're up 6 handles, so it's basically stabilized right here. We're looking at 71, almost 72 on the cash. I don't expect to see a lot come out of this thing right now. So let's go ahead. You guys had some other stuff. Yeah, so I brought up Etsy. Interesting. We just had a cycle event, but it looks like maybe a cycle high. I'm not sure. The 40 period moving average 172 is going to be your major support. You're seeing a lot of downward pressure here. This thing is in big downtrend. I guess maybe people are going to go to stores again and not buy crafted goods. I'm not sure what that means, but the good news for this is that the 10-week, yeah, this is weekly, 10-week is about to cross through the 21, which is typically sets up a low. So we could trade into a sideways range. The number to watch for Friday is 183.25. If we close below that, that will give us an STX buy signal. So we will indicate that we'll stay above the 40 and below the 21-week moving average. So the trading range would be 172, 207 in round numbers. About 11 minutes to go. Let's do a couple more here. Yeah, you would think with the shortage of chips, right? To bring up AMD, you think with the shortage of chips that these companies would be flying vertically, but they're not. And in fact, there's very negative trends. PPM1 is a minus 0.82. This is weekly chart here, minus 0.76. So you actually have a very robust downtrend, and we're trading down toward the S3 number, 76.88, low 77.04 right now. This is on a weekly basis. So we're trading down toward the bottom end of this range. Excuse me. It is allergy time in Arizona for sure. Yeah, we have, I don't know if Jay has heard back, but we're working on getting our updated screens together for our service. So our stock screens, so we'll be looking through those, looking for ideas that are going to be positive. So don't really have anything that stands out. Yeah, I think, I mean, I cover gold in my daily videos. I want to stick to some other stuff here. So here's the UR energy. I mentioned this in, I think, last week's stream that I thought that excuse me. I mentioned that the energy is still very much in play, and I believe that we're going to see a substantial move yet in energy. I don't think it's anywhere to being overplayed. This is actually getting a potential for a weekly RXT sell signal on this one. So it's a 1.3. Looks like it's a penny stock. So this thing is probably going to come back into the range here. But it's definitely had, it set up one of these patterns very similar. Tesla did one of these patterns. I realize this is a small cap stock, but we're seeing this type of action usually suggests you're going to see a lot of consolidation on this one. Yeah, so here we are in PLBY group. Got an RXT sell signal on a daily basis yesterday, and now we're down trading toward the STX number 5302, low 5260. So let me just make sure that number's right. Yeah, and last trade 53.99. So we traded just below the STX number after getting an RTX sell signal yesterday. These type of situations, this is a daily. Usually we'll set up a sideways pattern for at least 2 or 3 days. Let's take a quick look at the weekly. Yeah, this stock is probably played out, and we're going to see a very large consolidation range up here around, looking at the grid, probably between low end S1, S2 would be $46.03, and probably see R2 57. So you're probably going to get a pretty broad range up here. So this thing looks like it probably spiked out this week. Take a quick look at Visa weekly. It is it's got a very strong uptrend that's going on here, but we are trading down toward the STX number 224.53, low 28. So we're trading just below S2, almost to an, I'm sorry, below an S2, yeah, S2, and almost to an S3. So this thing's probably going to stall here, but it should continue to move higher with the PPM1 at 0.75. Okay, let's take a look at the, let's go over to the market now. We got about 5 minutes to go. Continuing to see a little pressure coming in here. This is a 1 minute graph, so we saw a pretty good move from some profit taking coming in to close. Nobody wants to hang in before the Thursday numbers come out and all of that. So we'll have the claims and all that. So a little protection being taken on the close here. Not a lot of enthusiasm to hold it. In fact, we're trading pretty close to the low of the session here. And that was after being up at what, 80? What was the high? 80. Yeah, so we're off about 12 handles. And matter of fact, the futures just went negative as we're coming into the close here. Let's see if we get any firmness and see if it wants to firm up at all. Overall, pretty lackluster day, but after yesterday, this is pretty much what you would expect, I would think. SPX right now up 317, and this weekly pattern is concerning to me in that, let me see if I can zoom in on this real quick. Yeah, what I look at, you notice how narrow the ranges are getting on a weekly basis, and I talked about this earlier, that we've basically been completely flat going back 4 weeks ago, closed at 41.85, 41.80, and then we closed at 41.81, and now we're at 67. So we're just staying in this flat range, and it's just really not a lot there. But what is happening, as I mentioned earlier, is that this PPM1 is still turning up. So there's still going to be substantial amount of support in this market. It's a bit lower in the pattern. It's about 100 points lower, but that number is coming up about 40 points per week. So the 41 even, 41.20 handle that we were traded down to yesterday is about as low as this thing's going to get. Yeah, somebody's asking if I can explain why the banks are strong today. I really don't have an answer for that. I haven't had a chance to follow them today and see what's going on. But JPM, take a look at some of the stocks. JPM on a weekly is moving up towards its upper range, but we've got nice trends here in these financials. And if you go back to November of last year, look at some of the videos that I did back then. I was telling you that both energy and financials were the play as we came into November and December. That was the place you wanted to actually go. Okay, there's our close. A little bit of a bid on the close, not much. Really just stabilized right around this 59.60 level. If we go back over here and just take a look at the market grid numbers for today. Let me go to a daily. Market grid numbers were showing R3 4188, so we actually got up to 4187.72, so we're about $1 off of R3. And S1, I was looking for an S1 R2 today, so we actually got a little better than that, got up to an R3, but finished back at in between S1 and R1, so managed to be up just slightly on the day. But this is pretty much as expected, especially before the next 2 days are going to be pretty big as far as things go. So let's see what you folks are talking about. Yeah, so let's take a look at the 2 minute after the close. Yeah, it's really basically stable. They're starting to sell a little bit, but yeah, no one really wanted to hang in. I think there was just folks bailing out ahead of the market. So we're seeing it print down a little bit, some selling coming in. The low 53 handle on the day, so we are definitely seeing some selling coming in here. Thanks, Steve. I forgot to go back full screen off of that Zoom. Thanks. Yeah, I do. I think the market is going to be your best hedge from that standpoint. If you recall, if we go back over to this long-term analysis, this thing is telling us things are going to go a lot higher, and it's going to be hard to believe the future without any sort of major inflationary pressures. That's for sure. Yeah, Deloitte, that's an interesting question as far as that goes. This is, let me come on full camera here just as we finish the session off here. You know, what sectors would be the first to show signs? That's the beauty of having the database, being able to track everything on a sector by sector basis. Right now, we're still seeing very robust environment in our database, so we're not seeing any of those signs. Once those things start to emerge, I'll be able to identify them very incrementally through our database, and that's the beauty of, you know, being able to watch, you know, 14,000 symbols simultaneously. You know, so actually it's 16,000. So, you know, you can see some of these movements starting to happen, and right now we still have a fair amount of traction on our daily and a lot of traction on our intermediates. And I remember intermediates started to come in last July and August, and I told you folks then that when that type of configuration starts to happen, then that's the prelude to a much bigger move. And I remember I looked at a cycle event, and it was, I believe, last August, and I remember talking about that, and all the trolls were telling me how the market was going to make a new low. Well, not so much, right? So we continued to rally. We saw a substantial amount of traction in our database, and we've rotated the short-term database, I think, 3 times during the one cycle of the weekly. So what happens, our intermediate models will get traction and they'll stay. the average holding period is like 225 plus days, and where the short term they're only 35, around 35, 40 days in the holding period. So what happens is you'll see a rotation, the markets get strong, the short-term database gets up to 65 to 80% bullish, and then you'll see it roll over, recycle. Meanwhile, the weekly charts, they surge during there, and then they go in the sideways mode, and then you see the next level, you see a rotation back in, and that's where we are right now. We went down to about 16, 17% bearish just a few bullish a few months ago. So we recycled the database completely, and now we're recycling, and we've been up to about 62, 63% bullish, and we're at 57 right now. So there's not a lot of signs of any negative rotation. And once that starts to come in, then we'll start to see which sectors start to roll. And that's what I'll start to talk about when we see the intermediate database finally hit its end. That's when we'll see that. So let's, I think I might have this around somewhere. Let me just, yeah, I can go here and show you this real quick. Let me bring that up on screen. So right now the intermediate database, 74.66% long, 12,236 symbols are trending upwards right now, or have upward bias. And when we look at the sectors, we have 11 of the 12 sectors. The only sector that is not in rotation right now is healthcare. And we're looking at most of these are starting to get long in the tooth. Basic materials. Just seeing which ones are long in the tooth here. Yeah, really basic materials is the primary one. Maybe you could go to technology. It's starting to get a little frothy, but it's 140. No, it's 141 of 244. So most of these cycles have a way to go. When I go over to this page here, this is probably the most important thing. If you get anything on hanging out with me, this is a viewpoint you're actually not going to get a lot. Let me try to zoom in on this so you can see it. Yeah, so the weekly models optimize. 201 is the trading days is average. There's about a little right around 222 trading days in a year. So the better part of the year is the average holding, and then the weekly and models 1.2 has a shorter term holding period, about 166 days, and 217 in the 3.2, so the characteristics are a little bit different. But if we just looked at optimized weekly, right now, the average current duration is at 100. So we're at 1/2 of the way through the market cycle on an intermediate basis. So and this is actually what the analysis suggests in the weekly analysis. That's what I'm talking about. The S&P going to 4,200, going to 4,600, maybe 51. That's exactly what the database is telling you, that there is a lot to go. Right now, the average profit that is returned this is the only thing on the weekly models, and I believe it's because of the expanded returns that we're seeing in the last year. But we're about right now let me just look at this. We're currently about 81% of the returns that happen on the intermediate have been realized, but I believe these things are going to be extended because of the patterns that I've been seeing on the weeklies. And a lot of these upward objectives, you can see just with the few stocks that I covered today, that there's quite a bit. And that's one of the things that you can see by utilizing our database is you can actually bring up every symbol in there, and you can see exactly what the expectation, where it's likely to go, how many days it's going to hold, those type of things. So you have some context of what's likely to happen. It's incredibly powerful once you start to understand that. And I know we have our WaveTech training group on Tuesday that we do via Zoom. And, you know, there's just so much power in understanding this stuff and having a context instead of, you know, guessing, well, when's it going to end? And that long-winded answer as usual. But in determining what sectors, where the rotation is going to be, we'll know that when it happens. Based on the holding periods right now, basic materials, I'm not sure it's going to roll because we have so much inflation and so much demand coming there. I think this thing is going to extend. The fact that it's already extended, it usually only has 164 trading day holding period. It's at 239, so it's already extended. And if we were to go to a trade profile on this, we could see what standard deviations and returns and all of that stuff. So you have the context, and this is the important part of having math around your ideas, not just drawing trend lines and, you know, doing some discretionary work where you have a lot of statistics around expectations is really what it's all about. So it is 11 after. Yeah, so I have to call a friend of mine. I'm glad somebody just mentioned the SpaceX or Starlight. I have a friend that just got Starlight, and he was supposed to install it this weekend. Last weekend. I need to call him up and see how it's working. So that'll be interesting to go. So anyway, thanks everybody for coming. I know it's a short session. We usually do 2.5 hours. We'll see how next week goes. Yeah, we'll see how next week goes. I've got a lot of stuff coming into a head right now that I'm working on, so my time's somewhat limited to spend as much time as I have with the channel. But anyway, thanks for showing up, and you know, hopefully you found today's session useful, and you were able to gain some things that I'm not able to talk about on my nightly videos. So thanks again, everyone. Have a great afternoon, the rest of your day. And I guess you'll see me tonight on the video for Thursday. Thanks again.